Good afternoon, everyone. Hey guys, this is Bruce Marshall with Simpler Trading doing the nightly market update for Wednesday, March the 2nd. So, welcome to Wednesday. A lot's been going on since last Wednesday when I did the last update. We've had all kind of news with Russia and Ukraine and the Fed, trying to figure out what they're going to do. The Fed had said they were going to raise rates 50 basis points in March, and now they're saying 25 basis points. So the market did like that. It did bring us up to a pretty critical level here today. Let's jump in here. I've got the NASDAQ up here in the ES and the ticks, but let's jump in here and just look at the action of the market today. You guys know I like to trade the S&P or the ES, get more accurate levels on the ES. But the black area is today. The light gray is the overnight session. So last night, kind of down, back up, and then we're off to the races. This, if you have seen any of these videos, you probably see these lines. These are voodoo lines, which are based on Elliott wave. And typically they will act as big levels of, they will act as fences or big levels of resistance. Typically you might fail there. We went through it today. Came up, there's 4,400 that you see there. You see the high on the day, 4399.25. So we're right at 4,400 and then we fail. So this is the 4,400 level is actually a pretty critical level for us to get through, if we're going to keep going higher, or to fail here if we're going to go lower. And as you know, or you may not know, the big round levels on the S&P and on all the indexes, but the big round levels meaning 4,200, 4,300, 4,400, the 100 increment levels are the biggest levels of attraction. So they're magnets that draw price to them. And then you have the 50-point increments, 4250, 4350, that type thing. And then you have the 25-point increments, which are the third in the strength, I guess. But let's look at this. Let's back this out to our 20-day chart here. We'll take a look. And as you can see, last Wednesday, of course, here's this Wednesday. This is last Wednesday here. This is when we had the first, I guess, bombs going off, or the actual, I guess, the start of the war in the Ukraine, and we had this huge flush down overnight. We came all the way down to 4,100. Now, if you remember in the video I did last week, I said I'm targeting 4,100, and it's so funny, or kind of funny, that I recorded that, and within, I said I've actually got a hedge down there. I was talking about hedging and doing things, and I said I'm targeting 4,100 on the downside there, and I posted the video. It was recorded, posted. Within 3 or 4 hours, we were, headed that direction very quickly. And I was not thinking we would get there within hours. I thought we'd get there within maybe a week or two. But we immediately came down there. Look at that level. See that red level, 4101.22. We got to 4101.75. That's how accurate these are. And these levels are set a long time ago. So they are very predictable. And they're pretty accurate most of the time. So we hit that, and we immediately bounced all the way back up here to the snow line. That's a massive move. We've been having some huge, these are massive moves. It's been going 100 points a day, 120, 130, 50 points a day, that kind of thing, in range from bottom to top or top to bottom, that kind of thing. Crazy swings. It's been good. We've been trading the volatility, and we're actually making money in this kind of market, which is kind of fun to be able to make money in this market. But it's dicey. It's hard to get on the right side and all that kind of stuff. I use range-bound trades for the most part, and trade the volatility, and that's been working extremely well. So anyway, if we look at this, this is our snow line up there, the white line, and as you can see, we're kind of all over it right here. Here, and the next big magnet up here would be this level, or you see at 4550. So if we keep going, of course, there's 4,400 is right there. we get through this, if we break through this tomorrow and break it in any kind of meaningful way, next stop is probably here. We have to cross these little levels, this skyline, be a magnet there, cross that skyline, and then on up here if we are to keep going this way. Or we fail if we take this out and we probably come back down here. It does make more sense to me that we go higher first and then come back down, and let me show you what I mean on a longer term scale here, 1 year chart. That white line is the one we were just looking at, that we keep going up here, we take that out, we take that out, we keep going, come up here, and then maybe fail and come back down to kind of continue this downward trend. A lot of that's depending on news, going to depend on what happens in Russia and with Russia and Ukraine, all that kind of stuff. What's going to happen with the Fed and the tone that they take, and what they say and all that kind of stuff. So we could absolutely go either way, and I'm not sure. Now I'm positioned both ways. I've got a hedge on the upside and I've got a hedge on the downside. I've already done a little trade to offset the cost. The hedge I have on the upside is I have no cost in. As a matter of fact, I have a $445 profit regardless, and I have a free hedge on the upside just by the way I set it up and maneuvered it. I have another hedge down here at 4,100 on the downside, and then I've got some trades spread out in the middle here. This is on the ES/SPX/SPY. And as far as other individual names like Google or Amazon or Tesla or whatever, I don't have anything on right now. I'm being very, very light in this market. Got to be very careful. I told you guys in the last video, I've been saying this for 6 weeks, lighten up, do half size. If you normally do 10 contracts, do 5 or whatever, just reduce your risk in this kind of market, because this is a tough market to trade. We're still profitable on the year in bias, and it's going good there, but I'm being very careful, and that's the way you have to trade in this market. So, take trades when you can, but make sure that you have an edge in the trade, and limit your risk if you're wrong. Try to get creative with some of these trades like we've been doing, and I like to have an unequal risk reward. I like to risk $500 to try to make $5,000, that type thing, and not risk $5,000 to make $10,000, that kind of thing. Works best in this kind of market. So be careful again, go kind of light. I wouldn't say don't trade, because you can miss some really good opportunities in this market if you're in the market, but you got to be selective, and you got to be careful, and you got to do your homework, and and find the setups that work for you. So with that being said, if you're having trouble, you're frustrated in this market, come join us at Simpler Trading. Come join me in the Bias Room, BIAS. That's Bruce's Income Accumulation Service, or the main room. I'm in there as well, and we'll try to make some money. So thanks for the time, guys. I appreciate it. Have a great rest of the week, and good trading. Thanks.
Without Simpler Trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency.
It's one of the things that won me